In case you weren't aware, Xero does actually have a fixed asset register. It's a whole module, it's very comprehensive, and you can run your fixed assets and depreciation through it. I'm just showing you a straightforward way because you may not want to use it. There is a bit of a learning curve to it. This is really for your accountants and bookkeepers who just want to really just whack it in and see the balance sheet reduce in a very simple, straightforward way. But of course, it's your business. The choice is yours. So first things first, here is an example agreement. It will say hire purchase, contract purchase. I mean, you would have done the deal, so you will know the basis by which you're actually acquiring. Here you'll see, ignore the retail price, it's showing a selling price of 52,000. There's no trading or anything like that, and I'm not going to complicate it by going over tradings. This is just straightforward hire purchase agreement paid for by monthly payments. Here you'll see there's a £75 admin fee. Again, they're repeating the amount that's actually financed and the total charges. Now, in this case, these charges are made up of interest, and it will include the admin fee. But you will have, your agreement will have other documents on it that will outline it in even more detail, hopefully. But this just gives you an idea. And then you'll see the first payment here is more than likely a multiple of these. And then these are the payments each month until it's a 60-month agreement and until it's finished. So if I move that back out of the way, first thing we need to do is make sure that we have the accounts or categories in our chart of accounts to account for those numbers. So what we have to do is enter the asset as an asset, and then we have to account for the payments. If we go to accounting and chart of accounts, I think there should be most of them there. This is obviously a demo copy, and this is showing the default chart of accounts for Xero. You may well have a more bespoke chart of accounts, but you will have similar ones in there. So if you're unsure, speak to your accountant, but this should give you a pretty good basis. So the first one we want is the fixed asset account. Now I'm going to sort this by type. So if I come down to fixed assets, here we are. So there's all the fixed asset accounts, and there's motor vehicles. So that's fine. The next one we want is the actual account that shows the loan that we're taking out. So that will be a non-current liability. Should be up here vertically, and here we are. And you see it is differentiated from a standard loan. It actually says hire purchase loan. If you don't have one like that, or you might have it with a slightly different name, but that's the other one you want, the second one you want. Now, in terms of actually making the payments, what you're looking for is, or what you're looking for are, you've already got these two, and then you already want overhead accounts. So we want one that will show the interest and another one that will show things like the admin fee. I am going to scroll down and see if we have anything obvious in here. There might be quite a few overheads, to be honest. I'm so used to doing them for people that I forget what the default looks like. So they do have an interest paid one, but I think this is for, this is for bank accounts, so we don't really want that. So, okay, what I'm going to do then is, here we have 43743. Right. What we're going to do is create them. If we put overheads, I'm just going to add the account there. The account type is overhead. A unique code. So for this one, I'm going to put 438. If you're used to using Xero, you'll see that it's within that range of accounts. And a short title, it's confirming it's available, a short title. So I'm going to put the first word as finance. Did I spell that right? No. And what it is when you're doing reports and so on, and you're sorting, or even within the chart of accounts, if you want things to be shown together as a group, two ways of doing it is to give them sequential numbers and also to give them sequential names or sequential titles at the beginning so that they come up together. So if you saw that I sorted by type, if you sort by name, then they'll be together. And I want these accounts to be close together. So the first one is finance, and I'm going to call it hire purchase. We could just put HP to be fair, but I'm being pedantic here. So hire purchase interest, with my mouse, interest on payments. Yeah. And that's self-explanatory, it's the same thing. And here there is no VAT we're going to put for it. I'm going to save that. And then the other one we're going to add is also an overhead, as I said. And then we're going to give it 439. And I'm going to put finance at the beginning again. People have their own ways of doing this. This is just a simple way that I show people. And this is going to be other finance costs. So it's a bit of a catch-all, a bit of a dumping account for any other things that you get charged for on your finance agreement. That, however, that doesn't include things like, you might say with a vehicle, you might have negotiated maintenance with it. Then you would have another account that shows maintenance, and they would be treated in the same way with 20% VAT. So again, finance or other costs. I'm going to leave that at 20%, though we won't use it for 20%, just to show the fact that you have to be mindful when you're actually entering the data. So I'm going to save that anyway. Okay, so we have those accounts now. What we then need to do, or firstly what we need to do is, once those accounts are set up or we've checked that they're there, is we then need to create the journal. So I'm going to duplicate this. So then I'm going to go to manual journals and a new journal. And I might have already written this. Right, so hire purchase, Finance Company Limited. So just pretend it's called Finance Company Limited. It's probably, I don't know, Schroders or BNP or somebody. Toyota van, you might want to put the registration number, agreement number, entirely up to you. So this agreement actually started on the 1st of April 2023, so we'll pretend that's where we were. So over 2023. If I click on there, because this is clicked and it says default narration to journal line, it will copy here. I'm just going to leave it. In reports, it can get a little bit cluttered because it's actually on 2 columns showing you the same information, but it's not wrong. Sometimes it's actually easier, depending on what you're searching on, to find it under the description. So here, what we're going to put is the cost of vehicle. You might put cost of equipment, and I think it was 760. Yep, was this motor vehicle's asset. And then for that one, we are going to debit it by the full cost. So that was 52,130. Now, when it comes to, you see it says VAT here. I'm specifically talking to the UK, but in each country where you are, check the tax implications. In the UK, because it is effectively a monthly payment arrangement, HMRC treat this as a loan, so VAT is blocked. You can't claim it, even if you're charged it. So if there were VAT on top of this, the VAT would be included in this figure, but we still would not claim the VAT. The only exceptions to that when it comes to motor vehicles are if you are a self-drive hire company, you are a driving instructor, or a taxi company, or you have a taxi. Outside of that, even if it's wholly and solely for business use, you are blocked from claiming the VAT for it. And then the other side of the equation is the actual hire purchase amount. So hire purchase loan. Okay, so that's 52,130. Also, what would be useful is if you added an attachment of the agreement up here. So if ever you needed to refer back to it, or your accountant or auditor wants to refer back, it's already there for them to check against. That's you putting in the vehicle as an asset or fixed asset on your balance sheet, ready to be brought down as the payments come in. So we're going to post that. So if I click on all, there it is. Yeah. So if you recall, I'll show you again. The first payment in April, we're going to assume it's 30th of April, just for argument's sake. In April was 4992.80, and that's made up of multiples of this, including the admin fee. I'm not showing this to you, but they will, like I say, there'll be other documents that will show the breakdown of what this is. So remember that amount, 4992.80. So I'll take that back out. Now, in an ideal world, this will be showing in your bank feed. Obviously, it's not a real payment, so I'm going to set it up from scratch manually. So it's a spend money transaction. It's coming out the business bank account. And it's Finance Company Limited is the finance agreement from. Let's get rid of that. And it's starting... So the first payment was the 30th, 4th, 2023. You can put the same narrative as you did in the manual journal, or, you know, just the agreement number and so on. And then in here, I will just keep repeating it. And then we'll put agreement number, vehicle loan payment, whatever it makes, however it makes sense to you. So that 4992.80 is made up of 5 payments up front. If I bring this back over, the payments each month are going to be made up of 998.56 pence. Okay, so what that 998.56 pence is made up of is 52,130 divided by 60, because those are the 60 months, and that equals 868.83, and it's also made up of the interest charges. Now, bear in mind that before we divide the interest charges here, we need to minus that £75 admin fee and any other fees that you might have been charged to get the balance, which will equal the interest. 7858.6 minus 75, and then we divide that by 60 months, and that comes to, so don't forget it, 129.726, so we'll say 0.73, which should work out. Okay, so if you add those two together, 129.73 add 868.83, we get 998.556. So that's where that figure comes from. So to then show that, we're going to put in the initial 5 payments, and you can just put it in as a lump sum unit price amount, but just so you ever remember if you need to do it again, I will put in quantity 5. The actual vehicle loan payments are, as we said, 868.83, and the account is hire purchase loan, no VAT as we stated, and it actually doesn't matter whether it's inclusive or exclusive. We'll put it as inclusive, or just put no VAT if that makes you happier. Then we can put admin fee. And that is 75. For this one, and this would be the other finance costs. For this one, remember it was at 20%. We have not been charged VAT on it, so we're going to put it at 0%. As I said, check it within your own countries. And then, again, we want the interest payments, which we paid 5 of those up front. So that's 129.73. And that's hire purchase, interest on payments. Cut out the admin fee, not for this payment. And here you can see the 4992.80. So 5 times the actual vehicle loan payment and 5 times the interest on that payment. So I'm going to save that. I'm going to go to the balance sheet. 23. April. So if I go to the 30th of April 2023 and update that, and if we go to motor vehicles, it's there 52,130, and then if I come down to hire purchase loan, it shows 47,785.85, and if I open that in a new link, so that was the original loan for the vehicle. And here was the payment that came out in April. So now the amount or the balance of the outstanding loan has been reduced by that amount. Same principle as depreciation if you've seen that video. Link will be in the description. So that's what we're trying to achieve. And every month when a payment comes out, that is what we want to see. So I'm going to leave that there. So I'm then going to go back to my transactions. The next payment due is for 998.56. However, when that payment came out, now I'm making this up, it could easily have been in here. When that payment came out, it included the finance fee, the admin fee, sorry, but it's not showing here in the payments. So what likely will happen, and you'll recognize it when you see it because you'll know that it's from the finance company, is in fact it's at 998.56 add 75, 107356. So the next direct debit that you have, instead of being 99856, will more than likely be 107356. So if I go back and view this transaction, it's the simplest way to do it. And then I'm going to duplicate or copy this. The reference won't come over, so you have to do all that again. But as I said, this will be coming through your bank fee. So the next one will be the 30th of May. '23. Same information, but in this instance, it's just one payment because now it's just the regular payments coming out, one of those. And there's our 99856. But in this instance, it's also taking the money for the admin fee. Okay. And that is 75. And that will be, we set it up as 439, didn't we? Now, in this case, I'm going to change this to exclusive. In this case, the finance fee could be subject to VAT, though we haven't been charged it. So rather than treating it as outside the scope of VAT, we'll treat it as if it's within the scope, but it's just not been charged. I hope that makes sense. So that's payment number 2. Again, it's showing the monthly split, but with the admin fee. So we're going to save that. And then if I'm going to go back to my balance sheet, I can find it. Oh, actually, no, let me just go back to the account transactions and update that next month. Here we can see the next payment, and it's reduced it again. And all you need to do is when the money comes out each month is to recreate that transaction. Obviously the future ones won't have the admin fee, so you'll have all of this 86883, 86883 for 60 months until your running balance is at 0. Okay, if we go back to the balance sheet and I update that, in fact I need to move it on a month, don't I? So 31st of May, a quick way to do it. So there's your motor vehicles, and there's the loan amount still outstanding on it. And for those of you who are debits and credits enthusiasts and you just really want a quick summary of what they should be, when you purchase the vehicle, you debit the asset account and you credit the hire purchase account. When you then receive the invoice or the first payment leaves your bank, you then want to debit the hire purchase loan, which then reduces the amount owed in the actual balance sheet or in the hire purchase account. So basically you credited before and you're debiting to get rid of it. You debit any interest payments or any interest on the payments, and then that shows up as a payment in your overheads. So the principle of it is quite straightforward, but it can come across as quite complicated. And don't worry, the best bookkeepers and accountants can sometimes slip up on this one because of how it's treated and having to bear in mind whether there's tax on it, no tax on it, what's the debit, what's the credit. If this was useful to you, please do let me know in the comments. Like if you liked, subscribe if you haven't, and please see you again soon. Take care.